This conference will now be recorded.
Hello, everybody. My name is John Siegman, and I am the head of trading and research for VAREA LLC. We are a tech firm that has produced a family of algorithmic trading products based on our very revolutionary intellectual property, and I'd like to introduce one of them to you today called signal menus. Before we do that, though, got to take care of some legal stuff here. This is a standard disclaimer. Essentially, what it tells you is there's risk when you're trading. Okay? So, the first system I want to introduce to you in the VAREA family is called swing. It is a breakout strategy. It's meant to capture something to an average day range to maybe even an average week range. We have both buy and sell signals at the same time simultaneously. We do define risk in the premium package and profit projections and protections, trade management tools, if you will. So let me just give you a little example. The signal menu here, this is our basic signal menu. And you see in here, we have about 25 different markets we're watching on the futures markets. You can see they're all futures markets here. If you look in column 2, there we go. And then here, we also have the symbols. These are proprietary, and then you can see what we're actually trading, which commodity it is. We are covering treasuries, equities, precious metals, energies, currencies, and the softs like cotton, coffee, cocoa, things like that. So we pretty much cover all the futures markets here. And when there is a chance, or when the odds have increased, or when the odds favor a sizable vertical move, an above average vertical move, either up or down, you will see an active sign show up there, and it'll also be shaded in yellow. Next to that, we have an ADR, which is an average day range. That's a good thing. That's a good number to set your target to from your entry point. That's one way to use it. And then we also have a secondary target of an average week range that you can, use as your profit target as well. This is the signal menu, and this is what you'll get. It's your choice as a trader to catch the trade and manage the trade. If you've been doing this for a while, it's just we're giving you odds that you're going to see a rather sharp vertical move. I mean, even for option traders, this is pretty good. If you like to buy straddles and strangles, it can be very, very useful for that. Now, to do the premium signal menu, what we're going to do is you'll get the same sheet that we have above here. That we have here, but you'll also, on the bottom of that sheet, you will get the symbol. You'll see what the current status is. All right, so we've got here, that means we're going to be trading. If it's down here, we're going to be trading it. But you'll also see some of the actual experience. And we give you a little history of the last 2 times we did a trade with this commodity, just to kind of give you an idea of what we did. So you see we had a long position in crude oil that paid off. We had a short position in the S&P that did. We had a long position in crude oil that did not pay off. It got stopped out. And here we had a long position for S&P that did hit its target. So the way to read these things, I'm going to focus on this one here, this copper one, because I've got a good example of that I want to show you. Let me just get that up there and running before we do that. So here we go. Anyway, for the copper trade, you see if we have a go long, if price is greater than there, 453.65, or take a short position if we dip below 450. We've got a profit target on 1. We prefer to do 2 units or more because we have what we call a racehorse and a workhorse. The workhorse is the one where we take a small profit and then we reduce the risk afterwards, right? And this is a technique that we can show you. I'll try and do an example of it for you to show you just how we use it in the premium signal menu. So you've got our risk we got a profit target of 185. We've got a risk target of 255. That's just the initial for the racehorse. I'm sorry, for the workhorse trade. So let's go ahead and look at a trade, and I'll walk you through it. So let's go to copper here. And I've got it all mapped out for us. So on this day, we had a signal, hey, copper's is ripe and ready to move in a rather violent way. And we had our buy signal here at 453.65. We had a sell signal here at 450. Whichever one of those is violated, as again, this is a preference. If you like to trade at midnight, fine. If you like to trade in the morning, wait till the morning. I prefer mornings or after 3 o'clock. That's my preference. But we have guys trading at midnight or even waiting till the markets open the next morning. It's really entirely up to you and your time frame. However, we did get a trigger to get long copper, and our original risk is right here. So as soon as we get that long position in copper in the morning, right there, oops, don't want to do that. There's our workhorse. We didn't take a lot of profit, but we took a profit. So on the one contract, the workhorse paid off. And as soon as that pays off, what we do is we take the risk, the original risk, and there's a number of ways you can do it. But one of the ones that I kind of like is take my stop, my risk, to my entry point. So now if the trade goes bad on me, I scratch the second trade, or the buy and seller at the same price. So I made a little bit of money on the trade and then zero on the other. But we protected some profit there too. I mean, or at least our accounts. Now, then the other thing that I like to do here is take the original risk, and as the market's moving higher, you can trail a stop until, see how it keep trailing any new high, and then finally it reversed here. So the racehorse paid off as well. We had a workhorse that made a little bit of money, but this is really all about catching that racehorse or getting that racehorse to run. And that's why we want to implement the risk strategy to limit risk almost immediately after we get into, if we get the workhorse done, and then see if the market is going to move in that abrupt way, and which in this case it did. Now, another one I want to show you, we'll go to the Canadian dollar. We just had this trade recently. And here with the Canadian dollar, we had pretty much the same thing. So here you've got the buy to get long or the sell to get short. And in this case, obviously the market broke down through the short side. So we got short and we hit the workhorse quite quickly. Therefore, then our risk is going to go back to here. So this would be our original risk, right? So from there to there. So now we're going to start trailing this stop, trying to get this racehorse to run. And you can see it's running, and I move it down to here, and then the market reversed, and then the racehorse got stopped out on that bounce. We didn't make a lot of money on this trade, but we made some because of the management techniques, and really in hindsight that really worked out very well, because the next day the market came roaring right back, and so we took a little bit of money out of the trade. That's really the key with the premium, is that if you can get that workhorse money in your pocket, you've got a way to play almost for free to ride that racehorse. And that was really the idea behind having 2 units. So I highly recommend that, 2 units or more. These were the 2 trades I just talked about. This is what it looked like on there. And so the last thing I want to talk about is some of the other things that we do here at VAREA, or Algo Returns. We have product summaries. We develop proprietary signals and systems for institutional traders. And we also have the signal menus, which I introduced to you today, our first attempt at that. And then we have, of course, the full systems where we'll help you manage those trades. Also, if you have questions, you can always go to your broker, and he can answer any questions you might need. And again, the timing of the trades, it's all your prerogative. We want to give you at least some leeway, but we do have a way to guide you in another way. And one other thing, where this all really originated was from something that I put together years ago called Macrograph. If you want to go check out the website, macrograph.com, it's a very unique charting package that I put together, or software. And if you register on there, I'll get back to you, and we could. There's a bunch of educational videos on there, but it'll give you some of the logic behind building these strategies. So I certainly hope to see you contact us at www.algoreturns. Check out the site, and hope to see you soon. Thanks so much.